Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Thanks so much for joining us today. We have a special program. We have Mike Morrongiello in the studio with us, and we have John Schaub from back in Florida, who is on call-in and will be out here in about a week and a half. And it's great to have both of them. I appreciate you tuning in to Real Estate 360 program, your number one source of all of your real estate needs and education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom Wilson, your host for the Wednesday edition at 2 o'clock of Real Estate 360. Comes to you daily, Monday through Friday at 3, plus two extra shows at 2 o'clock on Wednesday and Thursday, along with my co-hosts, Joe Kuchera and Laurie Graymont. Each program has different guests, different topics, but we're all focused on real estate education. Do join us. If you can't catch us live, so you can certainly go see our podcast on RE360 Radio, and you can catch my programs on TomWilsonProperties.com, also on iTunes and on YouTube. If you are interested in getting a weekly newsletter on how economics is affecting real estate, we have an economist that writes that for us, and if you go to our website, TomWilsonProperties.com, you can sign up for that with no obligation, and your name won't go anywhere else. Nice short read to see how what's going on in the world economics now that we understand and know how much more closely coupled that is with real estate. Real estate's both a leading indicator and a symptom of all of our intervention and politics these days, and we can't afford not to know about it and know what's going on. Also, I have a report that you can ask for on how to select the best metro and product for investing in, and we're also pleased to assist you with any of your questions about real estate. In the studio with us today is Michael Morrongiello, who is certainly a very experienced and dedicated investor himself over, 4 decades?
Yeah, I've been doing it a while, Tom,
yes.
as you have as well.
And nice to have you with us. He also is the director of the Bay Area Wealth Builders, which is certainly one of the premier and longest-running real estate investor groups here in the San Francisco Bay Area. He has a wonderful program. I enjoy going to that one and supporting Michael whenever I can. So he has invested in many different kinds of real estate, residential, commercial, so forth, multiple states, and specializes in paper. But he's also a great educator, and he's known John for a long time. John Schaub has been an investor for probably also about 4 decades, and he's been very popular in promoting what I also like, and John helped me to learn in this direction of building wealth one house at a time, one of the best-selling books out there on real estate education. He's written other books. He's a very active guy, very proud of his state, Florida, where he resides with his family, and he's so active. He's engaged in all kinds of other things like being a pilot, and he's just a great educator, and proud and pleased to call him a friend. And John, welcome to the program.
Thanks, Tom. It's great to be with you.
So, John, for those who don't know you real well, you first got your interest in real estate when and how?
I worked as a kid in construction, and I noticed the guys who were making all the money were the guys who owned the land. So I tuned into the idea of making money with land early on, and then one of my first deals was a big land deal. I thought I was going to make $1 million off my first deal. That was my plan. Then just retire. I was 23, so it was a good plan. But it didn't work. I lost money on that deal, and I figured out that I wasn't nearly as smart as I thought I was. So I backed off and I started buying smaller properties instead of big properties, understanding that the people I was negotiating with were more on my level than the guys who owned $1 million properties back then. And I started buying properties that had cash flow because that was important to me as a young person. I had no other job and had no other means of support. And then I learned over the years which properties had less management than others, because if you buy a lot of properties, you're a manager. And I managed all my own properties. I still do manage all my own properties. So back then I acquired a bunch of apartment buildings and some duplexes and a motel and some commercial properties and had a variety of things. And I learned that it was hard to manage all these different kinds of properties because each of these tenants had different expectations. And I had a staff, I had people working for me to help me manage, and it was hard to train them to manage all these different kinds of tenants, because one rule didn't work for the same rule didn't work for a commercial tenant it did for somebody living in a duplex. You had two different conversations there. So to make a long story short, I started buying houses in 1973, and I learned that the house tenant stayed longer. In fact, I still own that first house I bought in 1973, and the tenant that's in there right now has been there for 26 years. So the couple things I learned is tenants tend to stay longer in houses, and because they stay longer, it takes a lot less of my time to manage it, and it was more efficient from a cash flow basis. Most people, and then I thought this, I thought apartments would have a lot more cash flow than houses, but what I didn't realize when I started buying apartments was every time somebody moves in and out, your expenses go up. Many times you have to replace the carpet or the paint or fix it up, and sometimes you have vacant days, and sometimes there's other damage. Well, that's a big expense to a landlord, and of course, every time somebody moves in and out, if you're the manager, you've got to go to work and find a new tenant. And so I wanted a better lifestyle than that. I didn't want to have 100 apartment units and having people moving in and out, and every week I'd have to find a new tenant. That was, be a full-time job. So I switched to the house business back in the 70s, and that's worked out really well for me. And I started teaching other people how to buy houses, and, creatively without going to banks, and how to manage them well so you can keep tenants long term. And so that's been our program, and I've kind of summarized that in my book, Building Wealth One House at a Time. If there's new investors out there, that's where I suggest you start. Get a copy of that book. It's on Amazon, and read it, and you'll see what I'm talking about here and how I think. And we taught a class in Sacramento in 1976, and it began in 78 and 80. And so I've been out in the California market, and the Orange County market for 4 decades, and watched the prices go up. And houses we were buying in Sacramento for $30,000 and $40,000 are now selling for $285,000. So prices do go up over time. You have to be patient. It's a long-term business. But if you have a 10-year plan, my wife said when she met me, I was the first guy she ever met that had a 10-year plan. If you have a 10-year plan, then you can accumulate quite a bit of wealth in a reasonable amount of time.
Well, I'm glad that relationship has worked out.
33 years later, and I've still got a 10-year plan.
I know we have a little bit of a parallel history there, John. I bought my first properties in the 70s as well, and I noticed now that the one advantage I think I don't mind buying out of state, but the tough part is you got to replace yourself with someone else who you feel is almost as good as you are to manage it, and I found that I've been able to do that. But I think, from my experience, I think everybody certainly would benefit from managing at least one or two properties themselves at some point, so you understand what that's all about. And so if you have someone else managing, you at least know what they should be doing and know what questions to ask.
Well, that's right. And you know how long an appliance should last, and how long a unit should sit empty in some market, and so you don't get fooled. And of course, the out-of-town stuff, sometimes you can hire somebody who's better than you are. That's the key to hiring anybody, I think, is trying to hire somebody who's better than you are at a certain job. I've always had a bookkeeper. I've always had maintenance people. I don't do bookkeeping. I don't do maintenance. I'm not good at either one of those two things.
Yep. Nor do we want to do it, right?
Yeah. And I could do it, I guess, but it wouldn't be right. If I painted a house, it wouldn't look right. If I balanced a checkbook, we'd be off by a couple bucks. So it's better to have somebody that has that aptitude and who will do that well, because you can hire those jobs done. And if you're good at the big picture, if you're good at strategy, figuring out what kind of properties you want to buy, what neighborhoods are going to perform the best, You go out and spend your time looking for deals, buying things for less than what they're worth, and getting great financing on them. Those are the big jobs. I mean, those are the jobs that pay very, very well.
Yeah, once I figured out how to do something, I don't want to keep doing it. I want to teach somebody else how to do it and then move on to the next part of the strategy.
Sure. It's more fun that way.
Michael, what do you thought?
You guys both have me beat since I bought my first property in the 80s, so you got a few years on me here. But, John, you and I have talked about this in the past, and maybe you might want to share for the audience. There's a controversy, or if you will, a lot of people talk about apartments versus houses. I know you and I have talked about quality of life issues, and maybe you should touch on that just for a few moments.
Mm-hmm. Well, I said a second ago, I started with apartments. I owned duplexes, apartments. I bought a bunch of little houses in the beginning because I was focused on cash flow, and I thought that's where most of my profits would come from, is cash flow. And interestingly enough, a lot of my profits do come from cash flow. In the house business, about half my profits come from cash flow, and about half come from appreciation. If you think about the properties that have the most cash flow in typical towns, they're not the best-looking properties. They're properties a little bit rough around the edges that you're renting to people that don't have much money, and they'll pay more rent because they're kind of desperate for space. So you might, in my town, for example, I can buy a house for $100,000 and rent it for probably $500 a week if I wanted to. Well, that's pretty good gross cash flow. But there's also a lot of time required to collect that $500 a week. Those people don't have a checking account. They don't bring the money in. You've got to go find them and collect the money. So it's a little different game. And what I learned is I got smarter, from doing this for years and years, that I'd rather have my profits come out. I want the cash flow. I want to give up the cash flow, but I want some of my profits to come out in capital gains. And if I buy a higher quality property, I'll have a bigger capital gain in the long run than I will if I buy low-end properties. And I look at the Sacramento market. There were 654 houses sold in February, I guess, and they were up. The prices were up 29%. But the ones that went up the best were the more expensive houses. The ones in the 290 range did a lot better than the ones in the 130 range. So it's just math, and you look at these numbers in your town and see which neighborhoods appreciate the most. And over a 20-year period of time, those are the neighborhoods I want to own.
Certainly, one of the problems with apartment houses, and I have some. I've bought 7. They've some have worked pretty well, and some haven't. But the ones that work well, they're larger ones that you can afford full-time on-site management, so that they can be there overseeing it all the time, and because you got a lot of eggs in one basket there. But of course, their value is driven up by NOI, the income, and not by appreciation. So houses, I think, tend to appreciate more.
Well, again, if you're a small operator like I am, I don't own thousands of properties. I don't own millions of units, or tenants, and I don't want them. I have a few dozen tenants, and that makes me happy. My properties are pretty much paid for, so I get about 30 checks a month, and that's I can live on that.
John, we need to take a break here for commercial. We'll be back with John Schaub here in just a minute.
Well, that was cutting it close.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. We have in the studio with us Michael Morrongiello, who's the program director of the Bay Area Wealth Builders and longtime investor, specializing in paper. And we have on the phone with us a rock star in the real estate education business, John Schaub. And he's written a book called Building Wealth One House at a Time, which has been very popular and helped many folks. He's been investing since the 70s and believes that you can build great wealth with little deals and doing a little bit at a time. And he's on with us today, talking about how he came about learning about that and his experience.
Yeah, Tom, right before the break there, we were talking about cash flow and the number of cash flows you want. I had one of my students in the office with me yesterday, and his goal is to own 10 houses free and clear. And he's been reading my books and taking my seminars for about 5 or 6 years, and he's bought 8 houses so far, and he's from Texas.
And what period of time?
In about 5 or 6 years.
That's
so
quite good.
A little better than one a year. I recommend to people when they're first starting to not move too fast, because you learn a lot every time you buy a property, and it takes a while typically to find a good deal. Now you can buy a retail and buy a whole bunch of them in a hurry, but if you want to buy something 10 or 20% below the market that's going to have cash flow from day one, that takes some work. That's not a 1 hour job.
I find the problem, I think, with most people that I assist is they've, of course, everybody wants to make a quick buck, and get rich fast, and they try all these schemes and other approaches which have those claims. But in the end, I always tell people, I think, real estate for long-term holds is the best get-rich-slow scheme there is. But you have to be patient.
The get-rich-quick scheme is a lottery ticket, so they sell them in every state, I think, and,
yeah.
and they only cost $1. So that's your best route if you want to get rich in a hurry. The problem is, if you win it, you probably won't hold on to it very long because you don't know how to invest. And you see people do that all the time, where they'll come into a whole bunch of money, either from a sports contract or a lottery winning, and 3 years later they're broke again. So that's not a long-term plan. That's a short-term plan.
And I think we saw a lot of that happening before the crash. People were speculating more and more, trying to jump on that bandwagon. And now they realize that the meat and potatoes, fundamental assets that produce income, like Robert Kiyosaki has promoted for a long, long time, is better out.
Well, it is, and I started a few years before Robert did, because I started. Bob Allen was one of my students a long, long time ago, back in the '70s, and Robert, I think, learned a little bit from him, and they both moved on. But the buy and hold strategy has always appealed to me because I'm not much of a flipper. I've tried it a few times, and I just don't have the talent for it. And so it takes somebody who's really good at knowing how to fix up a house and how to manage that process well. And I know Mike knows how to do it. I know he knows people who know how to do it well, and it's good business. But you don't want to confuse business with investing.
I agree.
Business requires a lot of time.
You get nailed with the highest tax bracket.
Well, and then investment, if you really own investments, you should be able to get on that cruise ship for a year and come back a year from now, and nothing bad would happen to you. And if you own a whole bunch of low-end apartments, something bad will happen to you, because if you're gone for a year, people will just stop paying the rent. So you have to think of it that way. And, I'm very lifestyle conscious. I have 3 kids, and I like to travel a lot and to do things other than real estate. And so I wanted to own properties that allow me to do that provide me cash flow and appreciation, but don't wear me out with the management. I can't stand 24/7 phone calls. That's not my lifestyle.
I agree.
John, you mentioned something I think that's very profound, and that is that these deals that are below market, where you're trying to find a deal, they don't just magically appear. They do require a lot of effort, marketing perhaps, ways to uncover them. They don't just fall off the trees or they're not low-hanging fruit that's easily picked. In today's market, a lot of people, we're in a very frenzied, crazy time right here in the Bay Area and elsewhere. Tell us a little bit about what you're seeing among your students, what some of the things they're doing to uncover deals or find deals.
And, John, we just got about 30 seconds here before the break, so maybe you can just get an intro for us.
Sure. Well, there's several ways to do it. A lot of people have very successful direct mail programs and that pull in lots of leads, and then they have to sort through the leads. I take a much more direct approach. I'll find a neighborhood that I want to buy a property in, and then I'll comb that neighborhood and look at every vacant house and everybody who's lived there for a long time. I'll talk to any estate sales. I'll talk to, but I'll target that neighborhood and until I find somebody who really wants to sell in a hurry, and then I'll make them an offer on that house.
Okay, let's break there, and we'll have you back and continue that conversation in just a minute. We have John Schaub with us in Florida, a longtime investor and educator, and Mike Morrongiello in the office or in the studio with us today, who is also a longtime investor, having a great chat about real estate investing fundamentals. We'll be right back.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. Thanks for being with us. We have in the studio today Michael Morrongiello, who's the director of the Bay Area Wealth Builders, and John Schaub, who's in Florida. Both of them longtime investors, and John is a great educator who's written some very popular books, including Building Wealth One House at a Time. And we are glad to have him with us today. Before the break, we were starting to talk about how you go find those products. And one thing I'll just slip in, since I'm a turnkey provider, is that yes, somebody's got to find the product under market, and you can either do it yourself, or if you don't think you have the time or expertise to do it, then you can utilize a good quality turnkey provider who's done all that hard work for you. And just give you an idea, if you're trying to find quality product like our company specializes in, the last 2 or 3 years, we've averaged 40 offers for every one that we win. So we could get houses with less offers, but they're not such good houses. And John promotes good quality houses and good quality tenants in good areas, and I must agree with that.
I certainly agree with it, and in the long run, if you're going to hold something 15 or 20 years, you don't have to buy it way below the market, but you have to buy it so the numbers work today.
Yeah, you got to have some money to rehab the darn thing usually, right?
Well, I don't buy houses you rehab, so I mean, if you're going to rehab them, absolutely you have to build that into the deal,
or let somebody else do it for you.
Yeah. The last house I bought, I paid $340 for here in town, and it had been totally fixed up. A doctor and his wife owned it, and they totally rehabbed it, so it was just move-in ready. And when I put the for rent sign in the front yard, I had 6 people who wanted to rent that house right away.
Wow.
So that's and the house is worth about $440. So I picked it up about $100,000 below the market. But it takes a while, and that was in a neighborhood that I've been looking in for more than a year. And I'd made several offers, a little like you had. I'd made several offers in that neighborhood that were rejected, but this house had been on the market for almost a year, and our market's hot. I mean, it's like the California market. Typically, something sells pretty darn fast. And when something doesn't sell fast, there's often a reason, and sometimes it's overpriced. And I think this house is overpriced. They're trying to get way too much money for it for a while.
John, other than getting into apartment business before you had enough smart people around you to help you figure out how to do that, what other mistakes would you say you've made that you wouldn't make again, or that you would like to tell new investors to not do?
Well, the biggest mistake I made early on was borrowing money without a good source of repayment. I bought land, and I borrowed money against the land, and of course that's a terrible idea because land doesn't have any cash flow, and so you're just a pure speculator at that point. Some other mistakes I made were guaranteeing loans. California has some pretty good laws on that, but some states, and Florida's one of them, has laws to protect the lenders more than the borrowers. So if you go to the bank and borrow money here and you can't pay it back, they will come after anything you've got trying to get that money back. And fortunately, I survived my first recession in 1973. That was the end of a boom we had here, and I've gone through 5 or 4 more since then. So I won't say I'm recession-proof. I think I am, but I look at recessions as buying opportunities now. But that wasn't the case when I was first starting. So when you're first starting, cash flow is pretty critical to you. And you want to make sure that when you buy a property that you know what it's going to rent for, you know what your expenses are going to be, and you know that you'll have enough income to make any payments, assuming you're not paying all cash for the house, to make the payments on the money you're borrowing. And if you do that in a market like today, we're at we've had the crash. Things are coming back off the bottom, and they're moving pretty fast. But I think the rental market is going to get stronger and stronger over the next few years for a lot of reasons, and I won't take too much time to go into it now, but
yeah, we're going to cover that a little bit more on the next week's show.
Yeah, but my point is, it's a safe time to buy.
Yep.
It's not a high-risk time to buy right now, but the thing you can do is risky is borrow money. Anytime you borrow money, you're taking some chance. So you just have to understand the terms and what you're signing and what you're promising to pay, so you don't get caught.
John, we got to take a break. Hate to cut you off here. We'll be right back in just a moment with more of John Schaub.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. Michael Morrongiello here from the Bay Area Wealth Builders, and John Schaub, who's calling in from Florida, both long-term investors. And John is a great educator and has helped a lot of people over a long period of time build wealth one house at a time. We're talking about, John was talking about the advice that he would give people who are starting to invest so they don't fall in the same traps that he did. And certainly one was be very careful about your loans and guaranteed loans, and don't make commitments that you might get in trouble later when the market changes. What else can you tell us, John? What other thoughts you have?
Another thing, which is pretty obvious, but you shouldn't buy something unless you have the management figured out or covered. You know, if you buy, I've seen people buy properties like a little apartment building, and they've never been landlords before in their lives, and they think managing 6 or 8 units is going to be easy, and what they don't understand is those tenants have been tenants their entire lives, and they're good at it. And now you're a brand new landlord, and it's your first day on the job, and you're probably not going to collect much rent for a while because they're going to tell you stories instead of give you money for the first couple of months.
And I know you have some peer educators who, for many years, promoted that that was the niche. You know, go find these small apartments. Well, on the 7 that I've owned and helped others buy, I found that was not a very good area because you're not big enough to afford on-site management, and you show up after 2 weeks to go show a unit, and you find some druggie moved in there and chased out all the good tenants, and you're starting all over again.
Yeah, well, you know, they can be good investments, but they're a hands-on operations. It's like my motel I used to operate. You know, you can't just leave the motel on its own. You've got to be there all the time. So if you're looking for a job, a motel is a job, a small apartment building is pretty much a job, and a bunch of duplexes can be a job. So it depends on what level of management you're looking for. And I'm looking for as little management as possible.
And that's a real key, isn't it? A lot of things that people are doing, like flipping and managing and so forth, is a business, and it's active, and you can't retire on that. You can't take that to your grave. You got to. It's okay to do it while you're enjoying it. If you're not doesn't kill you too much to take the capital gains, or especially if it's short term and you're flipping, to take it as ordinary income. If you can live with that and it helps build up money to do other things and create passive, that's okay. But in the long run, you like having investments in things that are going to provide passive income with time, don't you?
Absolutely. I just taught a class on retirement investing, and we kind of projected ourselves out 15 or 20 years and say, what do we want to own 15 or 20 years from now? And if what you do is buy and sell 3 or 4 houses a year, you're going to quit doing that at some point in your life. That's nothing you're going to be doing when you're 90 years old, probably. So you got to say, well, when I hit 70, what do I want to be doing? You know, and what I like to be doing is just cashing checks.
Well, I think you also like to fly and fish and ski and things like that, don't you?
Yeah, I do have some pretty expensive habits.
Yeah.
I've got 3 kids, and we've been married for 33 years. So you know, it takes me a little bit of money to get through the day.
Pretty hard to do all those nice things and be managing an active business.
Well, I'm happy to be active, and I'm happy to manage my own properties, but I want to be careful. You know, first thing I look at when I go to buy something, and I've been tempted by all sorts of deals like we all are, is how much of my time is it going to take if I buy this? Mm-hmm. And sometimes you kid yourself. You say, well, I can hire somebody to do this for me, and that is possible, of course. You can hire management, but as you said earlier in the show, you have to know how to manage it yourself first, I think, and then you'll know if your manager is doing a good job for you. And you should know enough about the property. You know, my houses typically cost me about 40% of the gross income to operate. So if I collect, just use a round number, $2,000 a month, I get to keep about $1,200 of it. $800 will disappear for expenses. That's taxes, insurance, maintenance, vacancy, everything that leaves. You know, but I should be able to net about $1,200 a month. Well, I know that's a real number in my town. And that number is going to vary from town to town. I mean, Texas has higher taxes. Other places have, you know, everybody's got their own specialty. So you have to know what numbers are in every town in the country. But once you know that number, then you can tell your managers, this is what you should net. You know, this is about what we should end up with at the end of the day.
And certainly for apartments, that's a different number. 60% is non-uncommon of income. So.
Well, and the reason the number is higher, the expenses are higher in apartments, is because people are coming and going all the time. It's not most apartment buildings don't keep tenants for 5 or 10 years. They have people move in and out every year or two. And
Indeed.
it just costs you a lot more money.
Yep.
Hey, John, I know that you also do some selling. I know you don't typically do buy-sell business that a lot of people do. And of course, some people are looking to raise chunks of money, not just have rents come in and provide the cash flow for them that way. But you, I know, are big on using options and leases and options to sell, obviously because of some tax advantages. And maybe you might want to share with us a little bit about that program and how you like to sell in that fashion.
Well, the 2 points here that are important when it comes to selling. Number one, when you buy a property, you pretty well choose your fate, as to who you're going to sell it to. If I buy an apartment building, I'm going to sell it to another investor. There's no homeowner who's going to go down and get an FHA loan on an apartment building. It just won't happen. So if I buy a 10-unit building, my buyer, when I go to sell, is going to be another investor. And if you'll think through that scenario, the other investor, of course, is going to try to make a good deal. They're going to want the best price they can get. And the last apartment building I sold, I ended up financing for the new buyer because they couldn't get a loan.
Just a little bit smaller market for apartment building than it is for a house, huh?
Well, there's a lot of people that want to buy them, but the people that want to buy them typically can't write a check for them. I mean,
Right.
This is like a $600,000 building. The people didn't have $600,000, so they wanted to give me $50,000 down and have me carry a note. Well, there's a big difference between getting $50,000 cash and $600,000 cash. So now you've got $50,000 cash and a note for $550. And maybe they'll pay you, maybe they won't. It's not like cash in the bank. So when I buy a house, I want to make sure I'm buying a house that I can sell to a user, and I like to buy in a neighborhood that people really want to live in. So then when I go to sell it, I won't have to wholesale it. I won't be dealing with another investor. I'm going to sell to a user, an owner-occupant, who will typically go down to the bank and get a loan and pay me all cash. Now, if they don't have the cash to buy the house or they can't buy it right away, then I will finance them with a lease option typically because that's a very simple document. I don't have to transfer title. If for some reason they can't get a loan, they can't buy it, we can end it friendly. I can give them some money back, and then they won't leave mad.
And I like that that there's a whole lot more owner-occupants out there that want a house than there are folks that want bigger investments or just investors themselves. You're
dealing with somebody who's making an emotional decision as well as a business.
Yep, and that drives price up always. John, we got to take a break here. We have John Schaub from Florida on the line with us, and Michael Morrongiello here in the studio. We'll be back with a couple more takeaways in just a moment. This is KDOW 1220 AM, Real Estate 360.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. Michael Morrongiello is with us here from Bay Area Wealth Builders, and John Schaub from Florida, both of them long-term investors and educators. And John, it's been so nice having you on the program today. We're going to be fortunate to have you back next week, where we're going to talk more about market things. Do you have a takeaway or two for our listeners who may be relatively new in investing? What do you like to tell folks when they're starting off? What's the one or two most important things that they do?
Well, the mistakes I made, which I hope they won't make, is buy properties that caused me a lot of grief because of the management and the risk I had because I bought things and had debt that I had to struggle with. So I encourage people to buy the highest quality property they can, and as we were talking about right before the break, think about who you're going to sell it to and who you're going to rent it to before you buy it. Make sure you're going to like those people, and make sure when you go to sell it, you're going to have a cash market, somebody who will pay you a retail price, and go to the bank and get the money to do that. So that'll keep you from buying a lower quality property. And then the other thing is make sure you know how to manage it or have the management taken care of. If you have a management company that you can hire to do the job or manage it yourself, but understand how much cash flow you're going to have and know what that property will produce. So you're not kidding yourself. You're not buying something that's going to disappoint you as far as a rate of return.
Pretty good advice, I think, from a very seasoned investor. And if you'd like to hear more, you're in luck. John's going to be out here in a week and a half, and about a week or so. Michael, tell us about that.
Yeah, we're real fortunate. If you like what you're hearing from John, and the things he talks about are really timeless. They're just tremendous wisdoms that he is giving us here today. But Bay Area Wealth Builders sponsors several workshops during the year. We talk about a lot of the same topics that we have been discussing here today: how to buy, how to sell, how to lease, how to manage, how to option, how to exchange property. And the meetings are great networking opportunities that are very educational. We have a wonderful event coming up with John. John's going to be here in the Bay Area. He rarely comes to the Bay Area, and we're very fortunate to have him coming for 2 visits. One is Thursday night, the 17th. He'll be visiting with us up in Corte Madera at our regular scheduled monthly meeting. That's a Thursday evening on April the 17th. And then we have John doing a full-day class, and I highly recommend that people consider coming out to this class. And it's really John's discussion about 40 years of profitable deal making, covering a lot of different topics. There's really something for everybody during that day. He'll talk about how to generate cash flow 24/7, how to negotiate as a professional buyer, some of the things he's doing right now in this current market to generate income, to generate chunks of cash. And then also, as he touched on, retirement strategies and how to retire sooner and with more. It's a full day. It's going to be Saturday, April 19th at the South San Francisco Conference Center. And for more information, you can go to our website, which is www.bawb.info. That's www.bawb.info. Or you can call us, 707-996-6411. And I'll leave that number again, 707-996-6411. And it'd be great to have you come out and visit with us and certainly listen and learn from a guy like a John Schaub.
Well, that's something not to miss if you can possibly do that. And as a minimum, at least get hold of John's books. A lot of wealth of information in there. And also Bay Area Wealth Builders, one of the premier, longest-running real estate investment club groups here in the Bay Area. So make sure you visit that on a regular basis. Thanks for being with us. This is Tom Wilson with Real Estate 360. This is 1220 AM KDOW. And nice to have you with us.
Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360radio.com. That's RE360radio.com. AM 1220 KDOW.